Greetings, Dwayne, CFRN. Taking a quick look here at the US dollar before the Globex Open on Sunday night, 2nd day of April 2017. Time now is 4:57 p.m. Eastern. Markets open at 6 p.m. Eastern. We've been watching this trade setup for, I guess, a couple weeks now on the daily radio show. So I'm going to bring it up to speed real quick and then give you an idea of what to be on the lookout for when the markets do open tonight. Now on Friday, I gave everyone the full rundown, the heads up. If you want to go and watch Friday's radio show, you can do that by going to emini.cfrn.net, and it's clearly labeled Friday show. Click it and go. We talked about it right towards the end of the show, so you can fast forward and you don't have to go through the entire show. This trade, we drew our original fibs when we started tracking this trade a couple weeks ago from the swing low here, which was put in back on, if I can get that pop-up to go away, September 8th of 2016. Okay, that was the swing low. The swing high we used came in on January the 3rd. Now, this is the indicator set that we use in the live training room every day. If you've been in our live training room, you've seen it used on a smaller time frame for our intraday trading. We have a small, humble goal that we reach for each and every day, and that's what we teach you to do. However, those of you who have more trading experience, you're not just learning how to trade, but you're learning to improve your trading. This is something that may be of interest to you. The same indicators, the same strategy that we use on the smaller time frame for the intraday trading in the live training room every single day. You can look at the spreadsheet that covers the last 4+ years and see every single trade we've taken. It's all based off the same trading strategy. Bullish cross, price pulls away, price pulls back to physically touch this green line, which is the BVC. Price then pulls away, pulls back, up close by the open of the next candle. Bearish cross, we're looking for short trades. Bullish cross, we're looking for long trades. Bearish cross, we're looking for short trades. Now, we're at a really interesting spot in this trade. I drew from the low to the high, and what that gives us, you see this long green line? That's a 38% Fibonacci retracement. With me? Okay. Now, I did something else using Fibonacci math. I went from this swing high to this retracement low, back to this swing high, and what that did was give me Fibonacci price extensions on the downside. We're at the 38% price extension on the downside. We're also at the 38% retracement from the up move. So we're pinched right between the two 38% Fibonacci math indicators, for lack of a better term to use. Okay? Now, with our methodology, what is required for us to take a trade would be for this candle, which is from Friday, If you follow the horizontal line down, you'll see it says March 31st. Now, in about an hour, we're going to get a new candle. That's going to open most likely right in between these two green lines. One of two things is going to happen. We're going to get a move down, which over the course of the Monday trading session, which begins tonight at 6 p.m. Eastern, right on up until 5 p.m. Eastern tomorrow, that's the Monday session, we're looking for a red candle. If we get the red candle, then tomorrow night at 6 p.m. Eastern, when the Tuesday session opens, we'll be preparing to short the market. Now, what if that doesn't happen? What if we don't get a red candle? What if price continues higher? Well, this little black line here is called the step line. If that touches this green line, the BBC, which simply stands for bull bear cross, if price is above it, we're bullish. We expect higher prices. See how that works? And when price gets below it, we're bearish. We expect lower prices. As you can see, that's how it works, time after time. So tonight's going to be really important. Do we open and start to trend lower? Hopefully we won't trend too far. Actually, it would be nice to get down below this yellow line, which is a 50% Fibonacci price extension. If we could close just below that, and then tomorrow, and we won't close out that daily candle until tomorrow afternoon at 5 p.m. Eastern. And then at 6 p.m. Eastern tomorrow night, Monday night, that begins the Tuesday session. We would then enter our short position. Okay? And what sort of targets would we be looking for? Well, it's going to depend on what the size of this candle is, if that's what we get. Remember, it could go the other way and we don't have a trade. We might have a long trade, but that'll take a couple days, maybe a week for that to come together. This short trade should unfold tomorrow, Tuesday at the latest. Depending upon where we close tomorrow, our first target could be right here between this 62% price extension and this 50% Fibonacci retracement that was created from the low to the swing high. So we'll be watching that. That could be the first target. Now, if we were to get a huge day and close right on top of that, we'd probably wait for the other side. But I'm thinking we get an ordinary average size candle, and this becomes our first target. Here. Except it's going to be we can get it to highlight. There we go. Okay, then we can move it. Oh, goodness. Yeah, we're jammed up. Everything's too tight there. In fact, it's starting to mess with my original fib, and I don't want to do that. Maybe you get the picture. Maybe you don't. I was simply trying to grab that little circle and drag it. Yeah, like that. Okay. Based on how this candle closes, the candle that's going to open in an hour, if by close of business Monday it is a red candle, we could enter a position with our first target being here, our second target being here, our third target being here, and our extreme target being here. Now, a couple ways to do this. Establish your stop loss and leave it. Pay yourself on the way down. Let's say you're trading 4 contracts. Take off one here, one here, one here, and another here. And your stop remains at the same place. Because remember, important prices, important areas are almost always tested. So while it is prudent to move your stop to break even, I tend to leave that more for the shorter time frame intraday trading, because we're using incredibly aggressive risk management when we trade each day in the live training room. This is discretionary trading, and the market needs a little more flexibility. Okay? So you could leave your stop here, pay yourself here, pay yourself here, pay yourself here, and then once you get to this point, you know, you're going to tighten that thing up so tight that most likely somewhere inside of this little rectangle, price is going to come back and take you out with all this profit. Okay? That's one way of doing it. Now another way of doing it is as soon as you hit the first target, you move everything else to break even. And as you hit the second target, you drag your stop down to the first target. As you hit the third target, you drag your stop down here. And when you hit the extreme target, you drag your stop loss here. Now, this is more than a one-sided trade. If the US dollar unfolds in the manner that we're hoping it will, now again, we're not tied to the market rallying or collapsing. If it moves higher, no problem. We'll go trade something different. We're just mapping out what we'll do if the market does what we think it could do. If it doesn't, we don't get our feelings hurt, no money lost. We just move on to a different trade. Okay? If it does do what we think it will do, or could do. Now, keep in mind, because you've got this double bottom right here, there's a whole lot of people that when this double bottom held from here, February 1st, over to here, March 27th, you know, the bulls came in strong. Look how far they pushed it up over 3 days. What most of them don't know is that they just ran into the BBC. This is where we, you know, have one up on the world, so to speak. If this plays out, something else is going to potentially play out as well. And that something is going to be gold. But we're going to put gold on a larger time frame. There we go. Okay, so now what we're going to do, this is gold, the June contract. If in fact the dollar declines, we expect gold to potentially rally. We've already gone from this swing high to this swing low up to the 62% retracement. We were turned away. We've hit it again. We've been turned away again. However, on Friday, look what happened. At the 50% retracement, price held. We created a green candle. So over the course of the next 24 to 48 hours, if our dollar trade begins to work out on the short side, then we potentially will see a nice trade set up to the long side on gold. Dollar falls, gold rises. Now I'm going to grab my extension tool. I'm going to go from the swing low to the swing high, and pull it over to the retracement low. Okay, now look what we got right here. 50% price extension. Look at, just picture perfect, lines up with the 50% reverse fib. Remember, we went from the high to the low when we drew our fibs, not from the low to the high. Okay. All right. So, where would we look to enter this market? At potentially 1271. Our initial target would be 1281. Our extreme target would be 1336. So let's write that down. Entry. Let's be conservative. Let's make it 1272. Now the market's got to get a move on to take out this high, but that's okay. We can be patient. Entry 1272. First target, we'll call it 1280. Did we spell that right? Hey, we didn't. Second target is going to be 1315. Second target 1315. Okay. And our third target. Let's go 1330. Third target. 1330. Now, keep in mind, this isn't a trade that's going to happen in a day or overnight. So if you're going to participate in these types of trades, you need to talk to your broker. You need to make sure that you have adequate funds in your account so that you don't get a margin call. Because with a margin call, they'll most likely liquidate your position, and not only that, put you in the penalty box for the following day, which means you got to set out an entire session, no trading of any kind. And No matter how much you rattle the cage and go, but I still got money in my account, doesn't matter. You got margin called, and so they want to give you a wake-up call. It's just how it works. So write these numbers down, take a screenshot, however you do it. We're looking for the dollar to decline, for gold to rally. Now, if neither one happens, guess what? We just move on to the next trade. These are possibilities. These are potential trades that, based on reading the chart, understanding where the buyers and sellers are, if you're able to take a trade from 1272 to 1330, $12.70 to $12.30, $13.30, that would be 60 points. But this is actually 58 points. $58-point potential. Okay. Gold pays $100 per point. Does it not? So if we take 58 and multiply it times $100, then this trade is worth $5,800 per contract. Crude oil. When crude oil moves $1, that's worth $1,000. When gold moves $1, it's worth $100. You see, with gold, there's 10 ticks to a point. With crude oil, there's 100 ticks to a point. Sometimes that can get a little confusing. So this is a situation where if things come together, you could be long gold, right? So again, the trade setup, the whole idea, you can rewatch this, jot the numbers down. If it comes together, we'll be short the dollar, long gold. Just because one works out doesn't guarantee that the other will. But quite often, we see those two move in opposite directions. And so that's what we'll be watching for, we'll be looking for, and we'll keep you posted throughout the week. Tune in to the radio show each day. If you don't know how to do that, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. Where it says Watch Live Now, click there. You'll be registered for the entire month. You'll be able to join the show each day with one-click access. If you've never taken a free trial in our live training room, or it's been 6 months and you want to take another trial, go to apply.cfrn.net. If you have any questions about anything I've discussed, call 949-42-E-MINI. 949-42-E-MINI. You can reach us via email, support@cfrn.net. Remember, trading is risky. You can lose all of your money and then some. So it is very important. If you use any of our products, thoughts, ideas, videos, anything we put in print, anything that has to do with CFRN, if you're going to use it as part of your trading, you must. In fact, using our product signifies that you have gone to CFRN.net. You've read every CFTC required disclosure and our own CFRN disclaimers. It's incredibly important. This is your money, all right? If you decide to become a mentoring partner, we're going to put you in SIM first, and you're going to prove to us that you understand the strategy, that you are capable and competent before our blueprint will even give you the green light to go live. And then once you go live, we only want you to go live with one contract. And we want you to stay with one contract until you increase your account balance by $2,000. Well, I'll never get rich at that rate. It's not about getting rich. It's about building a business, a real business, a tangible business, okay? A business that can provide you consistent profitability if you learn it properly, if you build it properly, if you lay a solid foundation, and then brick by brick by brick build those walls. You can learn how to trade. It's not going to happen overnight. The late night guy on TV who tells you he can teach you how to trade in 5 days for $7,000, please don't fall for that. If you don't get your education with us, no hard feelings, but make sure you get a good quality education somewhere where someone will personally mentor you one-on-one, teach you, train you, answer your questions. It's a long road to Wall Street, and there's a lot of dark alleys all along the way. And you never know when somebody's going to jump out from behind a bush with the latest thing that came down the pike, the coolest indicator, the most awesome oscillator, and if you just had this one thing, you'd be knocking them dead every day. And it's only $49. So you have two opposite ends of the spectrum. The guy who has the $49 indicator that's going to end all your worries, no more stop outs, or the guy that, will actually teach you how to trade in just 5 days for only $7,000. We know you can't learn how to trade in 5 days. That's why our mentoring program is 90 days. At least in 90 days, you can get your feet wet. You can begin the journey. Okay? It's a lifelong journey. I don't know that you'll ever reach the top of Trader Mountain. Every day will be a challenge, but every day can be an adventure as well. Make sure you read the disclosures, make sure you read the disclaimers, and as always, you must trade with a hard stop. Unless you're using a hard stop, you're not a trader. Thanks for tuning in. I'll see you at the open.